Yo, what's going on? It's your boy Sam Finance. In this video, I'm going to be breaking down exactly how I would start trading in 2025 as a beginner. I'm sure you've been seeing the videos on social media everywhere and all the TikTok gurus talking about trading. There is a lot of good advice out there. There's also a lot of bad advice.
I turned $26 into $26,000 in 2 months, and I only learned how to trade in 2 days.
This video is so that you can watch and you can learn the proper way. I am not going to misguide you. I'm not going to sell you a course. I just really want to put you on game. Real steps, real advice, actionable steps that you can do right now, right after watching this video. My private stories, I'll be posting my profits that I take in trading, you know, my 7-to-1 trades, 10-to-1 trades. I'll post some of them up here. Make sure you get your notepad out, get your pen and paper out, grab a water bottle, grab some snacks, and let's sit down and lock in. Number one, you need to learn what trading is. If you don't know what trading is, it's the act of buying and selling goods and services, right? In this sense, you're buying and selling foreign exchange, so that's currencies, things like the US dollar, Australian dollar, Canadian dollar. You're also buying and selling gold, oil, gas, energy, indices, things like NAS 100, US 30, ASX 200. You need to understand the markets and the different instruments that are traded. Bonds, futures, foreign exchange, commodities. Then you need to understand how we analyze these financial instruments that we're going to be trading. There's two ways to do it. Fundamental analysis. Now, this is what is still used today if you are just simply share investing, but that's not what we use in day trading. In day trading, we use what we call technical analysis. You need to understand the difference between that and fundamental analysis, because you don't want to be using fundamental analysis to day trade. Now that you've learned the basics, everything that we learned in our technical analysis, we can put that into demo trading. So this is where we're going to do all our learning on demo. You're not yet ready for real money. I repeat, you're not yet ready to trade with a live account. If you trade with a live account at this point, you might as well say goodbye to it. Because one thing I will tell you about trading, when you trade with real money, it's a zero-sum game. What that means is your loss is my gain and my loss is another trader's gain. If you are going to be using real money at this point, you're going up against people who are in the market for 10, 15 years. You're guaranteed to lose. This way, it's better that we learn. We do our costliest mistakes on demo. Most people here will say, choose a broker and then use their demo account. Scratch that. Most brokers actually want to make it look like you are profitable on their demo account so that they can get you to start using money. That's how the brokers make money. They also make money when you lose. So we're not gonna yet choose a broker. Instead, you're gonna use a neutral demo account from the platform that all traders will use to do the analysis. And that is TradingView. From this point on until your whole trading career, you are gonna be using TradingView to do your analysis. It's an unbiased platform. When you have a demo account there, they use real-time simulation. It copies what the live market is doing. It's just that it's fake money. What you're going to do is just get the free version, create a paper trading account. The most important step is the amount of money that you do eventually plan on starting to use is what you're going to set in your trading account. If I have $1,000 I want to use to trade in the future, not right now because I'm still learning, then I'm going to set my paper trading account to $1,000. Reason being, if you just do the default 50K or $100,000 account that they give you, you are gonna be used to seeing those kind of profits and losses. You're gonna limit your account to what you're gonna start using with in real life so that you can get accustomed to seeing that kind of profit and losses that you're gonna be doing. I can see what I will be making when I use that $1,000 in real life. Whereas what a lot of traders used to do, and this is a common mistake, I've made this mistake before. When I was learning to trade, I would have $10 million of paper trading. By the time I do start using real money, I'm in profit, but because it's not astronomical amount of money that I was used to seeing, I'm like, dang, I get discouraged. So don't use money that you're not gonna start trading with in real life. You will have a greedy mindset from the get-go, and this is dangerous because greed is one of the top killers of successful traders. Now that you've got your TradingView paper trading account, you are gonna now choose a strategy. A strategy is a set of rules or guidelines that is gonna give you confirmation to either enter or not enter a trade. There are countless strategies. You will never finish them. No matter which strategy you use, all strategies work. You might have 5 profitable traders sitting in one room. Guarantee you, you will not find 2 traders with the same strategy. I use a strategy called Smart Money Concepts, particularly supply and demand. You do your own research, all right? I'm not gonna advocate you to do a strategy. Just because it works for me doesn't mean it'll work for you. I have friends that I trade with, we're all profitable, but they are support and resistance traders. I have other traders who are ICT traders. And then me, I'm a supply and demand trader. It doesn't matter what strategy you use. The main thing is you have to stick with it long enough for you to understand it, number one, to be able to apply it and to make it yours. Because even for traders who have similar strategies, they will have differing confirmations. And this is the mistake that most beginners make. They want to learn everything. They want to learn supply and demand. They want to learn ICT. They want to learn support and resistance. They want to learn every strategy. They want to learn everything that there is to learn, and they get overwhelmed and then they just pop and they get nowhere. You don't want to be the person who just jumps from strategy, because every time you jump from strategy to strategy, you're starting from ground zero. So why not just pick one strategy and stick with it long enough? And what a day trader is, every day I'm going to sit on the markets. There's different sessions in day trading. 3 main sessions that you can day trade. The Asian session is when the stock exchange in Asia is open. The London session is when the markets are open in London. New York session, when Wall Street opens. You can trade all 3 of these sessions, right? And you're doing this for about 3 to 6 months consistently, and you've managed to grow your paper trading account from $1,000 to, let's say, $3,000. You have a bit more confidence, you know what you're doing, how to enter into a position. You're gonna learn risk management, and risk management is very important to know. You wanna start practicing proper risk management from the get-go. Remember, right now we're in the foundational stage. We're not yet seeing huge amounts of money yet, but you have to do this properly so that you can set yourself up for the greatest return in the future. If you rush through this, you're just gonna delay your success in the future. You wanna start using proper risk management from the get-go, from demo. You're gonna learn what leveraging is, what a stop loss is. You're gonna learn what a take profit is. You're gonna learn how to use that. All right. If you don't use proper risk management, you're gonna blow all the accounts you will ever have if you don't use risk management. Now, you've been trading demo on TradingView for a while now. You've grown your account from $1,000 to $3,000, and you're ready to start trading with a live account. Then you can now go and find a broker. Now, what is a broker? A broker is the middleman who allows you to enter or exit the market when you're trading. There's hundreds of brokers. There's regulated brokers, there's unregulated brokers. I'm not gonna tell you which broker to use. If you wanna see a video about that, leave that in the comment section below and I'll be sure to make a video about that. If you're gonna find a broker that has low spreads, the amount of money that you do start trading with, it limits the amount of leverage that you have. Now, what leverage is the ability that a company can give you to open a bigger position, right? For example, let's say you create the basic account, which is 30 to 1 leverage, right? 1 to 30, right? That means for every dollar that you have in your account, they will allow $30 worth of position per that dollar, right? But $1,000 in your account. Technically, you could open a $30,000 position. But if the trade goes against in your favor, you will get what we call margin called. And what margin called is when you have reached your limit of margin in the account that you're allowed, the broker will have to automatically exit you out of that trade. As quickly as you can make money, you can lose it. And this is why I've been saying use proper what? Risk management from the get-go. It's a habit that you will form. You want to have formed good habits from the start so that you don't have to struggle to break bad trading habits down the line, okay? You're still going to be trading on demo account for majority of the week. As a day trader, let's say you trade 5 days a week. 4 of those days, you are going to be trading on your paper trading account on TradingView. And then you can do 1 trade a week of real money just to put into practice what you've been learning all this time. You are gonna do that for a month. What you've been learning about risk management, take profit, stop losses, all that. After some time of that consistently and you're seeing good results, you move from 4 days on demo to 1 day live, and then you move to 3 days on demo and 2 days on live. Those 3 days that you're on demo, you are still doing everything as you would as if it's a live account. You'll do that for some time, let's say 2 weeks or so, or until you're really comfortable, and then you can just scratch the demo and then just go on live. I must tell you, in this time, you might be nervous. You might make some mistakes because of the nerves of being in a live account, but it's okay. It's all right. And you might lose some money, but it's fine. Trust me, it's fine. It's inevitable. You're just going up against other more experienced traders. There's still a lot for you to learn. Anything can be a reason why you lose. So don't beat yourself up at this point. There's gonna be so many ups and downs. There's gonna be times where you just feel like the market is against you, and then other times you're just gonna feel like you've mastered this whole thing. Now, the last step, this is the most important step. As you're learning and you're adapting, continue to re-educate yourself. A good trader is someone who never stops developing. Either you're developing, you're fine-tuning what we call unique edge, or you are developing your mental framework, your psychology. So what you're gonna be doing is get one of these. This book is now your trading journal. So for every trade, even when you're in demo, you are gonna write down the date, you're gonna write down the trade that you made and whether it was a winner or it was a bust. If you want, you're gonna journal why it was a winner. If you lost, you're gonna journal down why you lost. This is what is going to be helpful for you to reflect on how you're trading. That way you actually develop. Number one is journal. Number two is constantly read books that teach psychology. As I said in my previous video, you should be reading Trading in the Zone by Mark Douglas. If you have not read that book, guarantee you, after you read that book and you apply what that book has to say, guarantee you'll see a difference in your trading game. The purpose of journaling is for you to then go back over what you've written down and take note and read it. So you see, okay, this period when I was having a great win streak, my psychology was on point. I was identifying key, patterns in the market. Lastly, before I end this video, you are going to actively fund your trading, whether there's going to be part-time job or full-time job, but you need to have active income in your trading. That way, you will be able to grow your account quicker, actively putting it from your paycheck, as well as the winners that you make from your trades. So it's growing at a faster rate. All right, with that being said, this is the end of the video. This is how I would get started in trading. So be sure to leave a like, comment, share, and also comment down what you want to see me make a video on next. If you haven't seen my previous video, make sure you click that video to be somewhere up here and go check that out about the 5 books that I recommend that you should read in 2025 if you want to start making some money. Thank you for watching. I'll see you guys in the next one. Cheers.